Hello everyone and welcome back to my channel, The Trading Mystic. I'm here again to present another interesting trading strategy. But before that, if you would like to know more about this channel, then do take a look at the introductory video. Alright, so in this video, I will cover a technical trading strategy for Bank Nifty, which is traded in the derivatives segment, also known as futures and options segment of the National Stock Exchange, India. I will take you through the strategy parameters and also share the backtest results over a period of 8 years. We'll also get to see a couple of examples on the trading chart, and we'll do some analysis using return plots and so on. What I will not cover in this video is the basics of technical analysis. For that, there will be a separate playlist uploaded very soon. So let's get started with the strategy parameters. We are going to run this strategy on Bank Nifty Futures contract trading in the NSE. This is primarily a BTST strategy. In other words, buy today, sell tomorrow. But there could be instances when the strategy gives us consecutive signals over a period of few days. In such cases, we will carry forward our position. Okay? We're going to make use of 4 technical indicators: exponential moving averages, EMA's 5-period and 9-period, 2-period ADX, which is the average directional index. We will also make use of stochastics, specifically the percentage K line, which should be of 21 period, and 14-period momentum. Okay, so let's take a look at how the strategy works. There are 4 conditions here. Condition 1, EMA 5 has to be greater than EMA 9. Condition 2, the current value of fast K line has to be greater than its previous day's value. Condition 3, ADX has to be greater than 50. And condition 4 says that the current value of momentum indicator has to be greater than its value the day before previous day. Now the question is when to buy and sell. We will look for these strategy conditions towards the end of market hours, preferably 5 to 10 minutes before the market ends, because that's when the contract prices and the indicator values stop fluctuating, the volatility reduces, the market stabilizes, and we will get a clear buy signal if there is any. Okay? Once you've bought, you're going to sell the contract the next day. As I mentioned, this is a BTST strategy. But if you get a buy signal the next day as well, then we hold our position and carry it forward to the following day. Here's the chart of Bank Nifty Futures continuous contract on tradingview.com. And if you take a look at the top here, you'll see the open, high, low and closing prices of any trading day. The red line here is the EMA 5-period line, and the blue one is the EMA 9-period line. Okay. And to the left, you can see the values of EMA 5 and 9 here. So let's go to the 22nd of October and we'll look for condition 1, which says that EMA 5 has to be greater than EMA 9. And clearly EMA 5 line is above the EMA 9 line. So our condition 1 is met. We can also take a look at the values to the left to confirm this. EMA 5 closed at 39884, which was greater than EMA 9, which closed at 39474. And as I mentioned, we need to look for these conditions towards market closing, 5 to 10 minutes prior to market closing. The EMA values would have been pretty close to the closing values mentioned here. Now let's check the other conditions as well. So here we have stochastics. The blue line is the percentage K line. This is 21 period percentage K line, and its value can be seen here in blue. Right below is the 2-period ADX line, and its value can be seen here in red. And at the bottom, we have the 14-period momentum indicator. All right. So let's go back to the 22nd of October. Let's take a look at percentage K line's value, which was 92.36. And that is greater than its value the previous day, which was 90.11. So condition 2 is met here. Condition 3 says that ADX has to be greater than 50. So on the 22nd of October, ADX was at 78.64. So clearly condition 3 is also met. And condition 4 says that the value of momentum indicator on the 22nd, which was 3040, has to be greater than its value the day before. So we go back a couple of days to the 20th of October, and we see that momentum was at 1776 approximately. So clearly the value on 22nd is greater than the value the day before previous day. So condition 4 is met. It is time for us to buy Bank Nifty futures. We will buy around the closing price of 22nd of October 2021, which was 40,396. And we're going to sell the contract the next trading day, which was 25th of October 2021, provided we don't get another buy signal on the 25th. Okay. Now, if we get another buy signal on the 25th, obviously we're not going to sell the contract that we are holding. We will simply carry it forward to the next trading day. Okay. Now let's take a look at the 25th of October just to validate. Condition 2, for example, the percentage K line was 92.35, which was not greater than the previous closing of 92.36. So obviously, condition 2 is not met here and we don't have a buy signal. So definitely we can sell the position that we are already holding. And we're going to sell at market closing around the closing price of 41,271. So we bought at 40,396. We sold at 41,271. That's an approximate profit of 2%. Now let's take a look at the backtest results of this strategy. I performed backtesting on Bank Nifty futures data for the last 8 years, which was for the period 2014 to 2021. The total number of trades or buy signals were 180. The hit ratio or win rate of the strategy was slightly over 62%. The maximum loss we incurred in a trade was about 4%, while the maximum profit in a trade was precisely 10.45%. And the cumulative return generated by the strategy was 191%, which means had you started off with 100 rupees in this strategy and continue to reinvest your balance in each trade, you would have ended up making 291 rupees. Now that's a cumulative return of 191%. Let's do some more analysis here. Take a look at the table in front of you, which displays the number of trades and the return generated by them. At the top, we have 6 trades that generated a return of 5% and above. If you add up the next 3 rows, we had 20 trades giving us profits in the range of 2 to 5%. And then we had 29 trades in the 1% to 2% range, followed by 57 trades where the profits were less than 1%. Talking about losses, we had 46 trades where the negative return was less than 1%, followed by 12 trades in the range -1 to -2%. And then we had 10 trades in the range -2 to -4%. We had a total of 62 BTST trades, and the longest holding period was 7 days. There were 2 trades after which we received consecutive trading signals, and hence we had to hold our position for 7 days. The plot in front of you is a visual representation of the returns generated by the strategy. The red dots are the negative returns, while the ones in blue are positive returns. If you remember, the maximum loss we incurred in a trade was minus 4%, and that can be seen here, while the trade that got us 10% profit can be seen here. Similarly, we can analyze other details. If you go to the year 2020, between 2020 and 2021, most of our losses were under 2%, with the exception of these three here. And this particular return was close to minus 3%. Whereas the profits, many of them gave us more than 2%, with these here where we got about 4% or even 5%. And then we have three trades here which generated more than 6% profits. All right, so that's all I had for you in this video, and I hope you liked it. Go ahead and tweak the parameters of this strategy and see if you're able to get a better result. I have posted several other videos sharing trading strategies specific to stocks, trading in India as well as US markets. So if you're interested, go ahead and take a look at them as well. I will be back soon with another interesting trading strategy. If you want to stay updated, feel free to click that subscribe button. You take care. I will see you soon.